Provisions and Reserves. Class 11 Accountancy. Welcome to my YouTube channel Guru of Accountancy. Dear students, today we will learn the concept of provisions and reserves. It is one of the important topic in the class 11 accountancy. Many times you will come across these words. So you should know the meaning of provisions and different types of provisions. You should be aware about the meaning of reserve and different types of reserves. So let us begin. But before that, I would request you please subscribe to my channel and please press the bell icon. So let us begin with the provisions. Provision is an amount set aside by charging it in the profit and loss account to provide for non-liability, the amount of which cannot be determined accurately because they are not yet incurred. So, provisions are created for the non-liability and expenses whose amount is uncertain. When you are not aware about the exact amount of liability or exact amount of likely expense, then you have to create provision for it. So, it should be clearly understood that if the amount of non-liability can be determined with reasonable accuracy, it must be classified as an liability and not provision. Provision is only created for the non-liability whose amount is not certain. So say for example, provision for depreciation on assets. We don't know by what amount assets will be depreciated. So provision is created for depreciation. Every year the value of assets go down, and for that we have to create provision for depreciation. Similarly, provision for bad and doubtful debts. When you make the credit sale of goods, some of the debtors do not make payment. So there are likely chances of bad debt and there are doubtful debts. So for that amount you have to create provision. We are not clear that which amount of debtor is irrecoverable. So we have to create provision for bad and doubtful debts. So you can see here liability is known but the amount is unknown, and that's why we have to create provision for it. Similarly, provision for taxation, provision for discount on debtors, provision for repairs and renewals, all these are the examples of provisions. So dear students, you must have understood in provision liability is known to us. We are aware that this would be the liability in future, this would be the likely expense in future, but its amount is uncertain, and that's why we have to create provision by debiting it to profit and loss account. Provision is a charge against profit, and that's why it is debited to profit and loss account. Now let us understand what is reserve. A part of the profit may be set aside and retained in the business to provide for future needs like growth of business, expansion of business, or to meet future contingencies such as workmen compensation expense. So that amount which is kept aside is known as reserve. So reserve means amount set aside out of profit and other surpluses to meet future uncertainties. In other words, we can say a reserve is meant for meeting any unknown liability or loss in the future. So here liability is unknown, loss is unknown, and that's why we have to create reserve for it. Unlike provisions, reserves are the appropriation of profit to strengthen the financial position of business. So this is very important point. Reserves are not charge against profit, but they are appropriation of profit, and that's why reserves are debited to profit and loss appropriation account. Reserve is not a charge against profit, as it is not meant to cover any non-liability or expected loss in future. Reserves are created for unknown liability or loss in the future. So you must have understood basic difference between provisions and reserves. Now, let us see different types of reserves. Basically, there are two main types of reserves. One is revenue reserves and second is capital reserve. Revenue reserve is divided into general reserve and specific reserve. Let us see all the types one by one and try to understand their meaning. The first point is general reserve. General reserve is the amount set aside out of profit for no specific purpose without any specific purpose. It is available for strengthening the financial position of the business or for the expansion of business. So in general reserve, purpose is not clearly mentioned. There is no specific purpose. It can be utilized for different purposes. It is also known as free reserve because they are not created for any specific purpose and can be freely used for any purpose. Say for example, general reserve can be created or utilized for meeting unforeseen losses, for strengthening the financial position of business, for the expansion of business, for the equalization of dividend over the years in case of companies. It is not compulsory and binding upon the business enterprise to maintain general reserve. Such general reserve may be created in the year in which the profit are sufficient and the management thinks it is advisable to do so. General reserve are shown on the liability side of the balance sheet under the head owner's equity. So general reserve is created without any purpose and it is freely utilized for different purposes as I told you. Second is specific reserve. Specific reserve is created for specific purpose and it can be utilized only for that particular purpose. Say for example, dividend equalization reserve. So dividend equalization reserve is created to maintain steady rate of dividend over the years. Here purpose is very clear. It can be utilized only for the equalization of the dividend. So dividend equalization reserve is one of the specific reserve. Similarly, reserve for replacement of asset. So many times reserves are created for the replacement of any fixed asset. So here also purpose is very clearly mentioned. Examples are not written here on the screen. I am just discussing with you. Okay, thereafter investment fluctuation fund. Investment fluctuation fund is also one of the specific reserve and it is created to provide for decline in the value of investment due to market fluctuations. So dividend equalization reserve, investment fluctuation fund are specific reserve. Similarly, workmen compensation fund. Workmen compensation fund is created to meet compensation payable to workers in case of unexpected or unknown event of an accident. So workmen compensation fund is one of the specific reserve. Similarly, debenture redemption reserve, which is created to provide fund for the redemption of debenture in case of companies. So general reserve is created without any purpose. It can be freely utilized, whereas specific reserve is created for a specific purpose and it can be utilized only for that specific purpose. The examples of specific reserves are dividend equalization reserve, reserve for replacement of assets, investment fluctuation fund, workmen compensation fund, debenture redemption reserve, etc. Third type of reserve is secret reserve. The name itself suggests it is a secret reserve. A secret reserve is one which is not disclosed in the balance sheet. It is not shown in the balance sheet because it is secret. It is a reserve, the existence or the amount of which is not disclosed in the balance sheet, and it is also known as hidden reserve. These reserves are created by showing profit at figure much lower than the actual. So actual profit is shown less, then secret reserve is created. Say for example, actual profit is 1 crore, but company is showing only 80 lakhs profit. So 20 lakh is hidden. That is a secret reserve. It is also created by showing the assets at a lower figure and liabilities at a higher figure. So company can show its assets at a lower figure. Say for example, the value of building is 5 crore, but the company is showing only 4 crore rupees in the balance sheet. 1 crore it is showing less, so that 1 crore is of secret reserve. Specific reserves, as we discussed, different examples are given: dividend equalization reserve, workman compensation fund, investment fluctuation fund, debenture redemption reserve. All this we have already discussed. Now the next type is capital reserve. Capital reserve are the reserves which are created out of capital profit, which do not arise from the normal operating activities. So student, there are two types of profit: revenue profit and capital profit. Revenue profit arise from the day-to-day activities, routine business operating activities, whereas capital profit arise from the extraordinary activities. So when capital reserve is created, it is created out of capital profit. It is never created from the revenue profit. Such reserves are not available for the distribution as dividend. Revenue reserves you can utilize for the distribution of dividend, but capital reserve you cannot utilize for the distribution of dividend. These reserves can be used for writing of the capital losses or issue of bonus shares in case of companies. In addition to the normal profit, capital profit are also earned in the business from many sources. The reserves created out of such capital profit is known as capital reserve. Such reserves generally are not available for distribution in cash dividend among the shareholders. Profit received from the different sources are result into capital profit. So say for example, premium on issue of shares or debenture. So when shares or debentures are issued at premium, so the premium amount is capital profit. Say for example, face value of share is 10 rupees and company sells it in 15 rupees. So per share 5 rupees received extra is a premium, and that is capital profit. Similarly, profit on sale of fixed assets is a capital profit. Profit on the redemption of debenture, profit on the revaluation of fixed assets and liabilities, profit prior to incorporation of company, and profit on reissue of forfeited shares. So these are the different sources from where capital profit is available, and from that capital reserve is created. Secret reserve. As we have already discussed, secret reserve is a reserve which does not appear in the balance sheet. It may also help to reduce the disclosed profit and also the tax liability. The secret reserve can be merged with the profit during the lean period to show improved profit. Management may resort to creation of secret reserve by charging higher depreciation on the assets. It is termed as secret reserve as it is not shown, not known to the outsider, or it is not shown in the balance sheet. Secret reserve can also be created by undervaluation of stock, charging capital expenditure to profit and loss account, making excessive provision for the doubtful debts, showing contingent liabilities as actual liabilities. These are the different ways of creating secret reserve. Now, what is the importance of creating reserve? So when reserves are created, they are useful for meeting the future contingency. They are also useful for strengthening the general financial position of the business. And they are also useful in redeeming a long-term liability like debenture. So for example, debenture redemption reserve is created for the redemption of debentures. So dear students, in today's session, we learn different types of reserves, and we also understood the meaning of provision and reserve. Provision is created to meet non-liability, whereas reserve is created to meet a non-liability. Creation of provision is a legal necessity, whereas creation of reserve is discretionary, that is, it is not compulsory. Provision is a charge against profit, whereas reserve is an appropriation of profit. The objective of creating provision is to provide for depreciation, provision for the doubtful debt, and other specific liabilities, whereas the object of reserve is to strengthen the financial position of the business. So in today's session, we learn the difference between provision and reserve, their meaning and etc. I will come with more such videos on accountancy. Till then, goodbye, take care, and please subscribe to my channel. Thank you very much.